This is not a pitch for private lending. This is an opportunity to reframe your thinking on real estate income. Private lending in today's turbulent market is potentially safer, smarter, and more lucrative. When you look at the risks that a landlord faces, collecting rent, worrying about paying the bank, maintenance, decreasing rents, increasing finance costs, these are hassles that can be eliminated through becoming a lender, or essentially becoming the bank. We've been in a market since COVID, let's call it 2021, where we had a ramp up and lots of profit in the real estate market. It was 2022 when everything started to turn and de-escalate and property values coming down because mortgage rates were going up. And each year has been different. And 2025 isn't better than those previous years. In fact, the market has gotten progressively more difficult. So, and there's almost like two markets are going on. There's the market of the people who understand and already understood all this stuff and are capable of managing it, and they're starting to accelerate, and their deals are getting better because they understood these risks and they planned accordingly, or they happen to be in cash, or they were lucky. Doesn't really matter what the reason is, but they're in a position to capitalize on this market. So in the lending world, there's a bunch of those, a lot of them. They're great opportunities, hard to find, and very competitive once we find them. At the same time, there's a bunch of people going downward and that have been hanging on by their teeth, and they're running out of rope, and they've hung on longer than anybody can. So we haven't seen the end of that. So it's a market filled with risk. And the latest risk is a new variable that nobody thought of, which is the trade war. So nobody thought of COVID, nobody thought of the ballooning money supply and the subsequent contraction, and then now we're faced with a new threat, which is the trade war, and what's to come of all this uncertainty. What you need in these markets is people that are nimble in thinking, are capable of capitalizing on these opportunities. And you must look at this market as nothing but an opportunity, because it is so disrupted that this is actually the time when the best opportunities happen. The condo market is a good example of one of the things that's been incredibly disrupted. And it's not a simple broad brush answer. So when we look at the CMHC statistics on this, which they recently put out last week, we're looking at days of inventory. And the graph looks like this. And what's happened is we've gone from, less than a month of inventory sometime in the middle of 2021 to now 5 years of inventory. And the reason why it looks like that is because of something called absorption. And absorption is just the amount of people wanting to buy and sell houses, and just nobody's buying right now. And the condo market is completely disrupted because the cost of building a condo and what you could sell it for are upside down. You can't actually build a condo for the price that someone would want to buy one for. So that's a problem. So no builder is going to build any new ones. And the ones that have ones on the books, they're going to have an incredibly difficult time trying to get the price that they want. And then the developers right now that have these projects out are looking to just kind of unwind their risk and hopefully make a small profit and move on to the next thing. But that's going to take them some time. So that's what we're dealing with in the condo market. But even there's more complexity, because certain locations are not going to be the truth, are not going to follow that pattern. Certain luxury product, certain locations are still going to be in high demand in spite of all the what's going on. So there's no hard and fast rule. So you really need to look at the situation almost situationally, deal by deal. But in general, that is a piece of the market that's been completely disrupted. Much of the condo inventory was actually sold to investors. And those investors were in turn renting or doing short-term stay or doing something to earn like a differential on the rent. So they would buy it for a certain price, right? And that price appeared to be going up all the time every year. So it seemed like no big deal. I'll buy pre-construction, and by the time construction happens, I maybe flip my unit. But if I don't flip my unit, I can rent it out because no problem, I'm going to get great rents. And that was true. It's not true now because what that caused people to do is buy these small micro units, so I get the cheapest rent. But I'm building, we're putting people into one bedrooms or bachelors, and these units essentially are so small that they're not really the choice of a long-term rental situation. So we have a bunch of product that's been built for investors that nobody really wants. Renters don't really want it, and new purchaser and users don't want it. So we have to unwind that. So the strategy for those who haven't done anything is we're going to flip to rental. And we're going to skip the step of trying to sell to investors. We're just going to build rental right now. And we're also looking at a lot of missing middle product and smaller product. Let's talk about missing middle. When we look at the condo market, the previous condo market that was building micro units and selling to investors who were in turn renting them, what people didn't realize is that the supply of these bachelors is going to be completely oversupplied for the market. What's really undersupplied in the same rental market, which is hard for people to understand, is actually a 3-bedroom or a really nice 2-bedroom unit style with a proper kitchen, living area, dining area, with in-suite laundry, decent amenities, and also has affordable rent. Okay? So let's not forget the also has affordable rent part of it. Okay? So you want to buy, so if you're getting $4.50 for your 400 square foot unit, yes, the rent seems affordable, but it's not. If you can get a livable unit at like $3.50 a unit, that's still, and that costs the developer like half the price to build, which is what the missing middle offers. I think that's a better product for both the investors and for the end users, being the tenants. So I think you're seeing that. The other thing that's amazing about this product is it's less disruptive to traffic. It's less disruptive in terms of just the whole environment that it creates. It's easier to bring to market quicker, which means it costs less for financing. So there's just so many benefits to this market that have yet to be realized. The other thing we're looking at is, with all the new DC waivers and the promotion by different municipalities to bring this to the bear, that's a positive tailwind, again, for the developers to go into this. It allows more people to get into the market, which could cause quicker development. We haven't even begun to see what's going to happen here. We're right at the beginning of this story, and I think it's a really good story. As a person who's been in the business about 33 years, I've seen everything. I used to work at CMHC. I did affordable housing. I worked in default management. I had to fix a bunch of housing. So this world we're in is very similar to that in the 90s. I also worked with land, and I saw the whole genesis of the creation of housing, the creation of a subdivision, the selling of a subdivision. I've seen this 7 or 8 times over within the same subdivision. I financed things like that. I've built giant condos, seen those go. This is something, even for my career, that I have not done, and I feel it's as almost like our duty or obligation for those of us who have been in the business to fix this problem, because we've seen all the other product, we've tried to solve it, and we haven't actually solved this. So this is for me, this is a little bit more than about making money. This is actually about coming up with a product and an investment that people can manage and that solves a real housing problem. So that's where our role is as Door Capital RealAlt, and we want to facilitate these developers and investors to get into this product.